What is investment and how to start? Investment is when a person allocates their money or other resources into certain assets in order to gain profit in the future. Simply put, instead of spending money today, you put it to work so it grows. People usually invest their funds in real estate, stocks, bonds, cryptocurrencies, and businesses. The main goal is to grow wealth over time and achieve financial freedom. Before starting to invest, the first rule is to increase financial literacy. It's important to understand how the market works, what risks exist, and what types of investments are available. Otherwise, wrong decisions can lead to losses. That's why it's recommended to begin with simple and relatively safe tools. The second step is to set clear goals. Some people aim for short-term profits, while others want to build long-term wealth. For example, a student may create a 3-year plan to fund their education, while a business person may invest for a 20-year retirement fund. Your goal will determine the type of investment you choose. The third important aspect is risk management. No investment is completely risk-free. Even the best investors sometimes lose, but their advantage lies in diversifying risk properly. Therefore, instead of putting all your money into one area, it should be spread across different assets. In addition, it's advisable to start small. For instance, you can first allocate a small portion of your monthly income into bonds or index funds. As you gain experience, you can move on to stocks and other riskier markets. The key is not to rush, but to analyze each step carefully. Another crucial factor is time. The most powerful feature of investing is compound interest. The effect of interest on interest. Over the long term, even small amounts can grow into significant wealth. That's why starting young is a major advantage. Managing emotions is also essential in investing. Markets constantly go up and down. Fear or overexcitement can push you into making poor decisions. That's why staying calm and sticking to a long-term plan is the best approach. The next step is continuous learning. Financial markets are constantly changing and new opportunities emerge. What looks profitable today may be risky tomorrow. That's why following the news, reading financial books, and listening to experienced investors is very beneficial. Finally, seeking professional advice can also be helpful. Especially if you're investing large amounts, consulting financial advisors can be very valuable. But remember, no one can give you a 100% guarantee. The decision always rests with you. Warren Buffett once said about investing and risk, "Risk comes from not knowing what you're doing." Benjamin Graham stated that there's no gain without risk. The best opportunities in investing lie in markets full of fear. Benjamin Franklin highlighted the importance of self-investment. An investment in knowledge pays the best interest. Thus, investing is not just a way to make money, but also a tool to achieve financial freedom. By starting small, managing risks, and continuously learning, success in investing is possible.